Anthony Grasso here, bringing you financial news you can use. Now, some people right now are freaking out, worrying about this inflation that's going on. We're seeing rising prices everywhere. In this video, I'm going to go over an overview of where we are in regards to inflation. I'm going to go over the Federal Reserve policy that's current, and I'm going to do what's called the Tony's Lightning Round, where I'm going to go over 7 different sectors and 40 stocks and ETFs that I feel will benefit from higher inflationary times. And as always, folks, don't forget to smash that like button down below. Definitely helps, and consider subscribing. Hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So inflation has surged about 5.4% in September, which compared to the same time 1 month a year ago, matched the highest rate in 13 years among the supply chain issues and ongoing labor shortages. Now, the key economic measures indicate that the housing inflation is almost certain to climb much higher in the coming months, and with the tight labor markets, increases in wage inflation is likely as well. Now, the Federal Reserve Chair Jerome Powell said last Friday that Americans should be prepared for the global supply chain to remain in crisis through 2022, and that the central bank is preparing to deal with the attendant challenges in the U.S. economy. Now, Powell said that the central bank is on track to conclude the asset purchase stimulus program by mid-2022. Now, what that means is the Fed would formally announce a gradual reduction or tapering off, so to speak, of its monthly purchases of the $120 billion in Treasury and mortgage debt at its November 2nd to 3rd meeting coming up next week. Now, likely it's going to reduce those purchases by about $15 billion a month, which would allow them to conclude the bond buying program by next June. Now, Powell also went on to say that he thinks it's time to taper off, but not time to raise the interest rate. So that's a little hint right there. So think of the money printing machine that's going on and then trying to raise rates at the exact same time. He wants to destimulate first before reaching back into his bag of little tricks that he has. Now, I bet he is going to increase the rates twice by the end of 2022, but that's just pure speculation on my part at this moment in time. We'll keep track of that. But a lot has to do with how the Fed feels about managing the economic exit from this pandemic. Powell did say that we think we can be patient and allow the labor market to heal. But at the same time, no one would doubt that we will use our tools to guide inflation back down to 2% if it looked like more persistent inflationary pressures were taking root, Mr. Powell added. So he's kind of leaving it up to say, well, we could do anything tomorrow. I'm not going to just guarantee we're not going to do something right now. Now, some are asking why increasing inflationary pressure is not hurting the stock market currently. Now, currently, one would definitely think that increasing inflationary pressure brought on by mostly the pandemic should be pounding the corporate profit margins and weighing on outlooks. But so far in this earnings season, that has not happened, and the stock prices have been jumping higher on the less dire narrative. Now, sure, before earnings season, investor sentiment was pretty negative, but once again, we're seeing companies put up solid results. 84% of companies are beating earnings estimates for the third quarter in 2021, in line with the record levels seen in the prior 2 quarters. Why, you ask? Well, companies are passing the price increases onto the consumers while cutting costs at the exact same time. That is designed to combat anything but transitory inflation. Now, I would say that inflationary pressures are no laughing matter, and at some point we might notice that cyclical inflation turn into structural inflation, and that wouldn't be a good thing. In my professional opinion, we're in this for the long haul, well, at least until 2022. So now let's talk about to discuss the real estate sector, specifically the real estate investment trust, or REITs for short. Now, Warren Buffett also suggests that owning real estate during periods of inflation, because the purchase is a one-time outlay for the investor, does not incur recurring costs and involves a resale value. In the rising inflation environment, real estate stocks act as good bets. Both the resale value of the property and rental income rise with price inflation. Now, REITs are generally set up in some income-producing investments. I would look at the ones with high yields supported by cash flow. Now, REITs combine dividends with real estate, making them a vital component of any portfolio hoping to navigate inflationary periods. Now, defensive growth may not be the most attractive attribute of the REIT space, You might not get that tech growth out of REITs, but what you would expect from real estate is mid to high single-digit earnings growth driven by contractual rent increases in the leases, inflation, rent, or even better. So if you have paid attention to the rental market right now, which, well, especially in the Florida market, rental rates are going through the roof right now with no sign of slowing anytime soon. I know because I own investment properties in Florida, and this year alone, I was able to raise rental rates by about 20 to 25%. Landlords get mark to market because when the lease ends, the owner has significant pricing power. There has been quite a bit of growth there. Now, REITs can also boost growth by acquiring and developing land. Now, the three subcategories of REITs to look at, types that are attractive for nice returns with lower volatility, include industrial logistics, which includes warehouses and sorting facilities used by retailers and transportation companies. Now, the second one subcategory would be the single-family rentals, which I'm currently in right now. And third would be the specialty residential, which is a category that includes companies that operate manufacturing housing communities, not mobile homes, but permanent structures built at relatively low cost. Think of age-restricted communities in Florida, Arizona, and California. So some of the REITs specifically I would look at would be, the first one would be the Vanguard Real Estate ETF, symbol VNQ. Now, this investment seeks to provide a high level income and moderate long-term capital appreciation by tracking the performance of the MSCI US Investable Market Real Estate 25/50 index that measure the performance of publicly traded equity REITs and other real estate related investments. Now, the second one would be the Van Eck Mortgage REIT Income ETF, symbol MORT. Now, this investment seeks to replicate as closely as possible before fees and expenses the price and yield performance of the mortgage REITs index. Now, the fund normally invests at least about 80% of its total assets in securities that comprise the fund's benchmark index. The mortgage REITs index may include small, medium, and large capitalization companies. Now, the next one is the iShares Mortgage Real Estate ETF, symbol REM. Now, this investment seeks to track the investment results of the FTSE Nareit All Mortgage Capped Index composed of U.S. REITs that holds U.S. residential and commercial mortgages. Now, this fund generally will invest about 80% of its assets in the component securities of its underlying index and in investments that have economic characteristics that are substantially identical to the component securities of its underlying index. Now, the underlying index measures the performance of the residential and commercial mortgage real estate, mortgage finance, and savings association sectors in the U.S. equity market. Now, going on to the next one, the real estate sector SPDR ETF, symbol XLRE. Now, this investment seeks to provide investment results that, before expenses, correspond generally to the price and yield performance of publicly traded equity securities of companies in the real estate sector index. Under normal market conditions, the fund generally invests substantially all, but at least about 95% of its total assets in the securities comprising the index. Now, the index includes securities of companies from the following industries: the real estate management and development and REITs, excluding mortgage REITs. Now, the next one is the U.S. Diversified Real Estate ETF, symbol PPTY. Now, this investment seeks to track the performance before fees and expenses of the U.S. REX, the U.S. Diversified Real Estate Index. Under normal circumstances, at least about 80% of the fund's net assets plus borrowings for investment purposes will be invested in real estate companies principally traded on the U.S. exchange. Now, the index uses a rule-based methodology to provide diversified exposure to liquid U.S. real estate market. Now, this is, of course, just a few of the REITs to start your search, and specifically the exchange-traded funds, so you get a broad range. So let's go on to the technology sector now. Now, big tech stocks become attractive when investors worry about inflation and interest rate hikes. When looking at a slowdown, hyper-growth tech stocks generally perform well. Now, the following companies on this list basically save on labor as well as cost. And I'm briefly going to go over the stock and what the company does. So the first one on the list is Salesforce, stock symbol CRM. But on this one, look out, because the valuation is 116 times price to earnings. It's pretty expensive. And Salesforce.com focuses on customer relationship management technology technology. Now, the company's Customer 360 platform delivers a single source which connects customer data across systems, applications, and devices to help companies sell, service, market, and conduct commerce from anywhere. It focuses on cloud, mobile, social, analytics, and artificial intelligence, AI, which enables companies to transform their businesses. Now, the next one on the list is Adobe, stock symbol ADBE. Now, Adobe is a software company. The company offers products and services used by professionals, marketers, knowledge workers, application developers, and enterprises and consumers for creating, managing, measuring, optimizing, and engaging with compelling content and experiences. Now, the next one is Workday. Now, that's stock symbol WDAY. Now, Workday is a provider of enterprise cloud applications for finance and human resources. Its applications for financial management, human resources planning, spend management, and analytics is used by organizations around the world and across industries from medium-sized businesses to the Fortune 500. Now, it provides organizations with a software as a service solution to help solve business challenges, including supporting and empowering their workforce, managing their finances and spend in an ever-changing environment, and planning for the unexpected. Now, I have Amazon on the list because specifically for its Amazon Web Service business, which is a subsidiary of Amazon, providing an on-demand the cloud computing platform and APIs to individual companies and governments on a metered pay-as-you-go basis. And Microsoft, in addition, symbol MSFT, has the Microsoft Azure business. And the Microsoft Azure, often referred to as Azure, hopefully I pronounced that right, is a cloud computing service created by Microsoft for building, testing, deploying, and managing applications and services through Microsoft managed data centers. Now, also check out ServiceNow. It's symbol NOW. It's a digital workflow company. The company's cloud-based platform and solutions deliver digital workflows for employees and the enterprise. Now, it markets its services to enterprises in a range of industries, including government, financial services, healthcare, manufacturing, oil and gas, technology, and education. And now I want to talk about Snowflake. Snowflake, it's symbol SNOW. It's a cloud data platform provider. Now, the company platform enables customers to consolidate data in a single source to drive business insights, build data-driven applications, and share data. But Snow seems highly valued, just like Salesforce, with the price to sales ratio of 93 times, which is one of the highest in the IT services industry. So definitely look out for that. And of course, we all can't forget Apple now, which we all know about that already. But now let's look at for a moment the semiconductor space. I feel this is a no-brainer to be invested in the semiconductor space. The whole world needs the products that they produce right now, and I don't see demand slowing anytime soon for chips. Now, the first one on that list would be NVIDIA, symbol NVDA. Now, NVIDIA Corporation is an artificial intelligence computing company. It operates through two segments: its graphics and compute and networking divisions. Now, the next one for semiconductors would be AMD. Now, symbol AMD, Advanced Micro Devices, is a global semiconductor company. The company's products include the x86 microprocessors, CPUs that you're using right now, accelerated processing units, APUs, and discrete graphics processing units, GPUs, semi-custom system-on-chip, SoC products, and chipsets for the personal computer, PC, gaming, data center, and markets. Now, the company segments include computing and graphics segment and the enterprise, embedded, and semi-custom segment. All right, so let's move on. So the next one is Lam Research, which is symbol LRCX. And I like this one because it's a supplier of water fabrication equipment and services to the semiconductor industry. Now, this company designs, manufactures, markets, refurbishes, and services semiconductor processing equipment used in the fabrication of integrated circuits. It operates through manufacturing of servicing of water processing of the semiconductor manufacturing equipment segment. Its products and services are designed to help its customers build performing devices that are used in a variety of electronics products, including mobile phones, personal computers, servers, wearables, automotive vehicles, and data storage vehicles. So I don't see them going anywhere anytime soon as well. All right, so the last one on this list would be the Applied Materials, symbol AMAT. Now, Applied Materials provides manufacturing equipment, services, and software to the global semiconductor, display, and related industry. So now let's go ahead and look at the cybersecurity companies that are on this list as well. Now, the first company I would look at in the cybersecurity sector would be Palo Alto Networks, symbol PANW. Now, it's a cybersecurity service provider. The company offers security platform that allows enterprises, service providers, and governmental agencies to secure all users, applications, data, networks, and devices with comprehensive visibility and contacts continuously across all locations. All right, the second one would be CrowdStrike, CRWD. Now, it's a provider of cloud-delivered solutions for endpoint and cloud workload protection. And the third one I would look at would be Cloudflare, symbol NET. Cloudflare is a global cloud services provider that delivers a range of services to businesses of all sizes in all geographics. Now, making them more secure, enhancing the performance of applications. And then the social media plays I would look at, the first one would be Snap, symbol Snap. Now, it's a camera company. Now, the company's flagship product called Snapchat is a camera application that helps people communicate through short videos and images known as a snap. Now, Facebook, which I just reviewed not too long ago, symbol FB, which I did in a video on that. If you'd like to see that, go check that video out. Now I would like to move on to the energy sector stocks to look at. Now, this kind of is a no-brainer as long as oil and gas prices stay high, but don't go chasing a rabbit down the hole, all the way down that hole. Now, the energy sector tends to perform well in an inflationary environment. Now, the revenues of energy stocks are dependent on energy prices, a key factor in the inflation indexes. Now, looking back within the time span of 1973 to 2020, such energy companies surpasses inflation around 70% of the time and delivered an annual real return of about 9% per year on average. Now, the operating backdrop of the sector is bullish. Oil prices have been on the tear, with the Brent hitting the highest level net seen since 2014. There has been growing demand with the easing of pandemic restrictions, along with supply disruptions and storage drawbacks. Now, let's go ahead and look at some of the companies within the energy sector that I feel that we should look at. All right, starting with number one. My top pick in the energy sector would be Chevron, symbol CVX. Now, this offers a way to benefit from rising oil prices by exposing one's portfolio to a diversified dividend stock with solid fundamentals. Now, moving on to Pioneer Natural Resources, symbol PXD. Pioneer Natural Resources is an independent oil and gas exploration and production company focusing on the Permian Basin in Texas. Now, oil and natural gas liquids represent about 80% of the production. Pioneer plans to limit its production growth, increase cash flows, and return around about 80% to its shareholders as dividends over the long term. Now, the company boasts having the lowest cost per barrel of any of the U.S. shale producers. Management anticipates the current 1.4% dividend could increase significantly over the next 2 years. Moving on to Tellurian, symbol TELL, they develop and own and operate a global natural gas business and delivers natural gas to customers worldwide. Moving on to Halliburton, symbol HAL, but please don't confuse this with the HAL 9000 from the Space Odyssey, and I just aged myself right there. Now, Halliburton provides services and products to the upstream oil and natural gas industry throughout the life cycle of the reservoir, locating hydrocarbons and managing geological data to drilling and formation evaluation and construction and completion and optimizing production throughout the life of the field. Now, next on the list will be Schlumberger, symbol SLB. Now, they provide technology for reservoir characterizing, drilling, production, and processing to the oil and gas industry. And now Devron Energy, symbol DVN, it's an independent energy company. The company operates through its U.S. operating segment. Moving on, we look at Williams Companies, symbol WMD. Now, the Williams Companies, together with the subsidiaries, operates as an energy infrastructure company, primarily in the United States. It operates through transmission and Gulf of Mexico, Northeast GNP, and the Western segments. Moving on to the Enterprise Products Partners LP, symbol EPD. Now, Enterprise Products Partners, Enterprise for short, is a provider of midstream energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products in North America. And last on my list, but not least, is Cheniere, symbol LNG. That they are an energy infrastructure company primarily engaged in LNG related businesses. Now looking at the banking sector, I do think that Bank of America, symbol BAC, will make a killing if the Federal Reserve is forced to tighten up. Now on the investment banking side of it, I do think that for aggressive investors out there, look at Goldman Sachs. And risk-adverse investors, you might want to look at Morgan Stanley. Now everybody knows about Wells Fargo's past screw-ups and problems, but I would call them the wild card turnaround story, but we shall see. Now let's move along to the pharmaceutical industry. And healthcare is typically immune to inflationary altogether. Now my first pick on this list for the pharmaceuticals would be Johnson & Johnson, symbol JNJ. Now Johnson & Johnson is a holding company which is engaged in the research and development, manufacture and sale of a range of products in the healthcare field. The next on the list for pharmaceuticals would be Eli Lilly, symbol LLY. Now, Eli Lilly and Company is a drug manufacturer company. Now, the company discovers, develops, manufactures, and markets products in the human pharmaceutical products segment. And everybody should also know Moderna, symbol mRNA. Now, it's a biotechnology company that's focused on creating transformative medicines based on messenger RNA. And now moving along to United Health Group, symbol UNH. The United Healthcare is the largest entity in the health insurance space on the basis of market capitalization alone, and built a solid health service business named Optum to diversify its revenues. We might also want to look at Encompass also. Now, Encompass Corp is symbol EHC. It's poised for long-term growth on its expansionary plans to open inpatient rehabilitation centers. Now, the company's strengths can be seen in multiple of areas, such as its revenue growth, notably return on equity, reasonable valuation levels, compelling growth in net income, and good cash flow, but from operations. But this company does suffer from low profit margins, so take that also in consideration. And the stock has taken quite a big hit recently this month as well. So there you have it, folks. I just went over about 6 industry sectors along with 40 specific stocks and ETFs to hedge against inflation. Now, do remember this is a high-level view and not an in-depth analysis of each stock like I have been doing with my other videos, but it should give you a starting point if you're worrying about preparing for your hedge against inflation. I will be reviewing some of those stocks I discussed today in greater detail in future videos specifically. So as always, folks, don't forget to smash that like button down below. It definitely helps. And consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.